Hello and welcome to another Daily Dose of Insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Monday, so we have Macro Monday here at Container Exchange. Let me quickly share my screen to show you a little bit more of what I'm talking about. So typically we look at the core macroeconomic indicators that come in throughout the week to give you a little bit of an overview of what you're looking out for. And this week, lots of interesting data come in, and it's particularly going to be a tale of two worlds, so to speak. So on Tuesday and Wednesday, we have data from Europe coming in. So first, the Germany Economic Index, so that's the ZEW Institute in Mannheim, issuing its Economic Sentiment Index, and that's expected to further decrease. While on Wednesday, we have UK GDP data come in, which is expected to fall into negative territory on a month-on-month basis. So 0.5 to actually minus 0.2%. Year on year, it's still positive, but of course, the trend is here not our friend. And then, as I said, tale of two worlds. If you look at the US, actually, the market looks relatively upbeat. US inflation is expected relatively stable at 0.2% month on month. So that's the core inflation rate, coupled with a strong labor market. So joblessness claims are still on relatively low levels. The market looks good. And we have slightly increasing retail spending. And all of that points towards a soft landing. And that's also what the Fed chief Yellen said, I think, over the weekend. Then looking back at Europe, we have the interest rate decision coming in on Thursday. There's a lot of speculation in the market on whether the ECB will pause its interest rate hike at 4.25%. At the moment, that's the consensus here. Also seeing sort of the signs of weakness on the economic front, which we've started talking about at the beginning of this video. Retail sales we just talked about as well. And then on Friday, looking on the last continent sort of in focus here this week, we have industrial production data from China come in, which is actually expected to increase by 3.9% year on year versus 3.7% on the previous reading. So also very good news here. Last but not least, let's very, very quickly look at two further headlines that I read over the weekend that I thought were very, very interesting. Number one, looking at Russia. Despite the levels of sanctions, the Institute for World Economy, so Institute for Weltwirtschaft in Kiel, actually did an analysis and saw that container import and export volumes sort of at the Russia main ports are surging over the past couple of months. And they conclude that Russia seems to be rejoining the world trade, at least with some trading partners, particularly what we talked about with sort of new container liners entering the market, especially applying the trade from India, China, etc., and Korea and China into Russia. So that's, of course, the driver here. And then last but not least, we have US container imports. So National Retail Federation issued this data here, which I thought was very interesting. You see here 2021 and 2022, you saw that COVID spike, all that volume flooding into the US, and then that significant drop, which was due to two factors. One is inventory destocking, which is actually slower than expected, and the second one is a drop in demand. And now we seem to be sort of turning the corner here and coming out roughly at a level of 2020 container volumes, import volumes. And then, of course, the big question is, what's this going to do in the quarters to come, especially essentially on the demand side. Cool. That's it from me, from us for today. Thanks a lot for tuning in. Have a fantastic start into the week. Happy trading, and talk to you all on Wednesday.